One thing that you might have heard of is called a DAF, or a donor advised fund. What a donor advised fund is you make a contribution today, so you get the tax deduction in this year, but you don't have to give that money away right away. So thinking about planning ahead, if you have a year of high income, or if you have a year where you sell a property, or have stock options come due, you can give in that year, because maybe you write a check for $10,000 every year, but why not put $75,000 in that year, get the deduction, and then in future years you can plan on giving that money away. The other thing to think of with a donor advised fund is you can get your family involved. And so because you don't have to give right away, you can sit down and meet and say, look, we want to give away $10,000 this year. Everyone go look at 990s and figure out what organizations you're passionate about, and you can put beneficiaries on these accounts. So if anything was to happen to you, your children or grandchildren can then take over and continue the legacy of giving. And then one other fun little tip, rather than writing a check, if you have appreciated assets, so many of us might have a stock that you bought Apple for a low price and now it's gone up and you have huge gains, and if you sold it you would pay tax on it. A donor advised fund, or even these charities, you can give that appreciated asset. So let's say you had $10,000 worth of Apple with a basis of $5,000. If you were to sell it, you're paying tax on that $5,000. But if you gift it, and then you can just go back and buy Apple for the $10,000 in cash you were going to give, you've reset your basis. So now you don't have any tax implications on it at that time. So you were able to give the same impact, but also get a much bigger tax benefit.